On this week's episode of the Investors Corner, me and Mike are joined by Fez from Mortgage Tribe, and we'll be having a look at what's happening in the mortgage world. Are rates getting better? What are lenders doing? Is now the time to make the move in getting your remortgage or moving home? And we'll also be looking at what's happened with current inflation rates. We've seen a reduction, 2.3% now. So what impact is that going to have for borrowers, lenders? And we'll also be talking about the general election. It's being called 4th of July. So how is that going to impact the housing market? What's that mean for landlords and investors? You'll hear me rant on about what Labour's policies are. So make sure that you're listening to this one. This one isn't to be missed. And make sure that you subscribe to the Investors Corner. Enjoy the episode.
Welcome to the Investors Corner, where again this week we're joined by Doctorov of the Mortgage Tribe mortgage brokerage based in Berkshire. Big news this week. I'm sure it's on your lips. I'm sure it's what you're thinking about. There's a general election which has been called in the middle of the Euros.
Oh,
controversial. We have to think about like important things when the football's on. So the general election's been called for early July, and also inflation statistics have been released for last month down to 2.3%, which is the lowest they've been since pre-COVID, I believe. So big changes economically and big changes on the horizon politically in 6 weeks' time. So a very short lead in to what's going to happen. Now, what happened last time there was a general election is house prices since the general election have gone through the roof. House prices have gone up on average about £35-40 per square foot of a house across the UK. So we tend to see a little bit of paralysis for a short period of time where everyone tries to figure out what on earth's going on, why it's going on, and if the lights are going to stay on. Invariably, the lights do stay on, regardless of who's in power, and then everything gets back to normal and house prices keep rising. We're set for a big change this time round, right? Where's your thinking at?
It's upcoming change is always good for the market, isn't it? It's always nice, and I think coming out of COVID and then the conflict in Ukraine, you do kind of look for a little bit of normality again, and we haven't really ever got there since, and it doesn't look like we're going to get there very quickly. So I think that's a somewhat of a cause to be a little bit anxious about what's coming up, because we don't know. The inflation news is positive, though. The inflation news is positive, and I think I looked at it slightly more positively than some of the media coverage that was basically saying, it came down less than forecast. I'm like, it came down, right? It's still coming down. Like it's moving in the right direction.
2.3% inflation rate is basically dead on where it should be, right?
I mean, they said that the forecast...
whether it's 2 or 2.3%, you're very much splitting hairs. Yeah. I read someone reposted an article from the Bank of England stats, or the Bank of England predictions back in 2019-2020, where we were allegedly about to hit the greatest recession that had ever hit the UK. Inflation was going to go through the roof and blah, 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 and it never happened.
Oh, but the Bank of England will be the first to tell anybody that forecasts are always wrong.
It's the negativity that comes out of the Bank of England in forecasting, which blows my mind. There's never any let's look for a positive here.
There's a lot of individuals who will be very, very relieved at the Bank of England that inflation wasn't sticky at around 4%. I think that would have probably been worst case scenario, base rate having to go even higher, and getting stuck on that 4% after going through a reasonably long period of high inflation would have been really tricky. So I think they're probably very relieved. The question is, and I think I mentioned this the other day when you or somebody else sent me a message, is that going to be enough to tip the next decision into bringing the base rate down? And also, how will markets perceive that next decision coming up to it? Is it going to be something where there's a bit of a feel-good factor? There's some change on the horizon that is a bit uncertain in terms of the general election, but with the inflationary figures being positive, and if the markets decide to sort of guess that there will be a rate cut, are we going to see some relief for borrowers? And I think that would be very welcome.
Well, I'm going to cast my mind back to the beginning of the year when me and you sat down and I said, I can't wait for interest rates to go down. When mortgage rates hits about 3.75%, it's going to be a bonanza. I'm going to remortgage. I'm going to pull money out of my mortgage and extend my house. And you said, that's not happening until at least the second half of next year. You're not going to see 3.75% in the first half of the year. You're on track.
I made a prediction, didn't I? In just sort of behind closed doors, that interest rates will be higher, borrowing rates for mortgages will be higher in June rates, than they were in July. I mean, and they are. But I think that there are sometimes those windows of opportunity, like in January when there was a bit of a price war going on with lenders. Some of them, moved quite early at the beginning of the year. They didn't wait until kind of mid-January for that surge to come in. Buyers were ready to go. Some of the lenders moved. They all moved after that. And I think I was speaking to a client, I was speaking to a BDM the other day from one of the lenders, and one of the rates I was looking with them in January was, or at the beginning of February, was 3.84, which now seems like, wow, that's a great rate. So I think we've had a bit of a taste of what it's going to be like when the new normal comes back, and it's difficult to speculate what exactly the new normal will look like, but it's very difficult to imagine that it's going to be back at where it was 4 years ago when the base rate was at 0.25% and the borrowing
days.
was
the good days,
so cheap that it just made a lot of sense. So I think especially from a landlord perspective and from an investment perspective, I don't think the uncertainty's going away anytime soon, unfortunately. But there's like I said, I viewed it from a very positive light. I think we take what positivity we can get, right, when we review the market. And for me, it was moving in the right direction. Let's just see what happens over the next 4 weeks. I think we're going to be listening to a lot of, I'm going to do this and I'm going to do that.
But I think the British public, and stick your neck out and talk on behalf of everybody in the country, but I think the British public now have got to a point with political promises that no one believes anything that is said. Like, I could literally say, if I'm Keir Starmer, I'm going to turn the sky pink. And no one's going to care as much as I'm going to put £2 billion into the NHS. Like, it's as believable as turning the sky pink. Like, I just don't see. I just think that the natural Conservative government has run its course, so there has to be a change, because no one can stay in power and popular for more than a decade or so. So it went rotten a couple of years ago. You can obviously say what you want to say about cronyism and this, that and the other that we won't go too far into, but it's how quickly, I guess, a Labour government can settle in and give that consistency.
Well, that's the bit that I think we have to be realistic with, because even if, let's say that Labour do get in, I don't think that there's going to be a case of, right, we're back on the right track immediately and everything's going to be rosy in 6 months' time. And if there is that kind of improvement that we're seeing, and that inflation really settling around that target rate, it's going to take some time for that to feed through to borrowers. It's not going to be quick, and again, it's difficult to assess what the committee's viewpoint on this in terms of where that rate is going to have to settle. Obviously, they want growth. They want to stimulate the economy. We don't want to live in a society where it's extremely expensive to borrow money for huge periods of time. But at the same time, they're going to be quite cautious, because I think moving too quickly in the other direction could sort of send us straight back in the kind of hole that we've been for a little while. So let's see. But I think just being realistic with it is that, and unless there's a really kind of aggressive reaction to a new government, we're probably going to be waiting a little while to see.
And I guess that's the question, isn't it? I was speaking to one of the guys in the office, and they said, my pension's gone up 16% this year because it's all stocks and shares tied. How will the markets react to an impending change of government? Will they receive it well? I mean, traditionally the market reacts well to a Conservative government for one reason or another. Will that bring it back down with a bump and give a bad start for the government, because everyone who looks at pension values goes, oh, well, that's not very good. Like on day one of a new government, that's what remains to be seen, I guess.
It's I'm a mortgage advisor, not a pensions advisor, so I'll sort of keep my mouth firmly shut on that topic. But I think with the way that we view it as mortgage advisors is that we have to make the right decision and give the right advice at that particular moment. We don't speculate too much about what's going to be happening in 2 years' time, providing that the advice that we provide is right for the now, and in 2 years' time we've protected the client, and that often means understanding what's going on with a whole portfolio rather than just one place, and just having an idea of how that particular portfolio is going to look, never mind what the market might be doing. And I think often putting off having that plan and then trying to react to the market as it's happening can be more volatile than just having a plan, sticking to it, and just basically having the safety of, okay, if that plan isn't we made it now, it was the right thing to do now, we secured a product now, but then in a year and a half time you think, but if we'd done the opposite thing, the right answer is the investment secure now? And even if there could be a potential for a slightly better return on investment from a mortgage perspective, are you secure?
So that's the question. My phone's going to start ringing in the next day or two from our landlords whose mortgages are due up for renewal during 2024, and the open question is, what do I do? Do I do it now or do I do it after?
You can always secure a rate for yourself, and this is something that we did a lot last year, is securing a rate and then just seeing what happens, right? And there was circumstances where midway through the year we secured rates, and then we actually swapped them to slightly better ones a little bit further down the line. And the caveat to that is every lender has their own criteria on how long after you secured that rate they'll let you swap to a different one. So you have to be really careful and definitely speak to an advisor on that and have them do that due diligence for you. But securing early does kind of protect you from if it swings the other way. So the answer to that is just get ahead of it. And I think I came onto your podcast at the beginning of last year. I could be wrong, or at some point last year, and what I said is just get ahead of the game in that respect. Don't bury your head in the sand and think, hopefully it'll be better in a few months, I'll look at it then. Because if it isn't, and you didn't take some action early to try and mitigate those potential circumstances, then you could be sort of kicking yourself a little bit. So there's plenty of case studies from last year where that worked, and there's also, like I said, some case studies where we secured a rate as a worst case scenario, and then actually after a while we swapped it to a better one with the same lender. So it's just getting yourself ahead of it.
I think a lot more thought needs to go into it now, doesn't it, by investors, by landlords, because there's other things that they could potentially do, because their financial side of things for their buy-to-lets is quite tight now, because there's certain things they can't claim for. Obviously rental prices have gone up, but I'm sure there were some landlords on fixed mortgage rates where now they're not. They've had to renew their mortgage and their rates have gone up. So financially it's quite tight for them. So like you said, you need to get ahead of the game. You need to think about what you want to do investment wise. Is it the long-term goal? Is it the short-term goal? Are you an investor that's got 10 properties under a portfolio? Do you want to diversify that portfolio now, maybe get rid of 2 buy-to-lets and buy a HMO property where you're going to get a bigger return from it? So there's just all of these factors to consider now, as in before all this went on, it was just yeah, I'll remortgage, I'll keep my buy to lets, I'm getting a great rent on it, I'm getting a good return, I'm getting a good yield. Now it's just, well, actually I need to look at the whole picture, and do I get rid of some, do I keep them, if I remortgage at this rate, or do I hold out for another rate?
It's not bad in the sense that landlords have to educate themselves more than they did in the past. When I 10 years ago or 12 years ago, the thing to do, and again, from a mortgage perspective, it's very different now. But the thing to do back then is got some spare cash, I'll just get a buy to let. It's straightforward. I'll just do that. Whereas nowadays, because of the sort of economic circumstances that we're in, if you want that to remain, if that's what you're going to do, and you want it to be profitable, you have to be very careful. You have to have that plan. You got to get the spreadsheet out. You got to put the properties in there.
They'll trust the Excel spreadsheet with all of the costs.
Yeah, and just just do your due diligence. It's not as straightforward as I'll just get a house and that's it. That's my retirement sorted. Because all of a sudden, I mean, we had a similar circumstance when we were moving recently, and my partner was wondering if she could keep the flat. Of course she could, but then we sat down and did the maths, and it just was a bit like, it wasn't worth it. It wasn't worth it for her and for us, for several reasons. But I remember a time when it was much simpler to do that. Yeah, to let your place and then go buy somewhere else, and all of a sudden you're a landlord and you're a homeowner. So yeah, in that respect, that is great. They have to be more educated on that matter, and I think. Whether you're listening to a podcast or whether on your way to work, or whether you've bought yourself a book on Amazon or whatever you've done.
Both are available.
See what I did? No, both. In that respect, you're having to make an effort to educate yourself, and I don't think that's bad. I think that's great to force people to have to do that.
6 weeks to the election.
Yeah.
They're
already talking about it. I mean, we'll do a podcast episode on what Labour's policies are in regards to the Renters Reform Bill, but they've got to do sort of a wash-up period of anything that they want to push through Parliament. They've got to do that before the 26th of May. So they haven't got long to get that passed through. Now, if it doesn't get passed by the 26th of May, then they've got to start the whole process again. And when Labour come in, they've got to go through, stage 1, stage 2, stage 3. So it could be another period of time before we see anything. Now, they've been quite clear on what they want to do in regards to Section 21 notices, the register, very much on the tenant side. Most of the policies that they want to put in place are rubbish. But that's
don't hold back.
Yeah, no, they're just rubbish. Don't make sense. Makes it harder for landlords.
Parties are available.
They're all rubbish. No one wants to vote for them, but you've got to make a decision somewhere. Anyway, so yeah, they've got their policies. It's now, if these policies go through, from what I've seen, and like I said, we'll do an episode hopefully next week, and I'll talk to you about these policies. Landlord's going to look at it and get scared off. They just start. Although there's some positive for landlords, the policies that Labour have got are just very detrimental to having your asset, losing control of your asset. So that's just going to push more and more people out. But yeah, it's something that I'm sick of talking about. It's constantly changing. You've got one person saying one thing, one person saying another thing. No one can agree to anything. Although it had its last reading, like I said, if it doesn't get done by the 26th of May, it starts again.
But to turn that around on you guys and be the one asking the question, it seems like the government's been fairly hostile towards private landlords for a long period of time now, in terms of making it more difficult to get that return on investment, whether it be like potentially a new government coming in and looking to make changes to how easily you can manage that asset and how quickly you can get access back to that asset. It does seem to be like a common thread. It's just, we're going to make it more difficult. And what do you guys think that the end goal is with this? Because they don't seem to be scared of driving out landlords.
No.
It doesn't seem to be, whichever side you talk to, the language they use is not landlord friendly. It's tenant friendly, and that's fine. I think there's protections that need to be there in place for everybody, but it does seem to be skewed to one side. And do you guys feel like there is a collective effort to drive landlords out and to change that rental market and rental industry into something that looks completely different to what is there now? Or do you think this is just a byproduct of poorly thought out policies that are trying to win votes? Which one do you think it is?
I think it's a mixture of both, to be completely honest. I think there is a common policy to drive out the Mr. and Mrs. Jones who own a 2-bed flat round the corner from their own home as a long-term pension style investment, in favour of huge real estate investment trust type builders, developers who own 10,000 rental units at a time, because they've left company structures reasonably alone compared to the taxation on a private landlord. Part of me thinks it was all just a huge bait and switch policy to make buy-to-let really, really attractive, and then just tax the hell out of anyone who jumped into that pond, which was very successful from a tax revenue point of view. And part of it, is absolutely, it's just a vote winner. They're just saying stuff because they know there's a growing population of people who are in rental, some by choice and some because they have to, which means they have to try and attract that vote, because the Conservative government have kind of got the grey-haired people whichever way, haven't they?
Well, I don't know.
In the south anyway.
Time will
tell. Yeah, absolutely.
So do you think then in that case, it's in order to shift that rental market towards those big pension funds and because they think they're easier to tax than private landlords? Or do you think it's because they're easier to manage in terms of having some kind of better quality of life and relationship with the tenant? Because I don't know.
I personally disagree that the quality is better in the corporate managed rental space, because I think from my experience with landlords, which goes back 20 years, most private landlords are very, very good people, and they wouldn't want to see their tenants without anything for longer than they possibly have to be, and they will go over and above to do it. Whereas a corporate landlord type outfit, I'm not going to speak for all of them, but I've seen replies such as, our maintenance budget has been used this month.
See, that's the thing, is because I think if you look a little bit further forward and you look at what these policies might make the environment look like for renters, you sort of struggle to see, you could be giving them, again, a bit of bait with that extra security, but at the same time having a landlord who doesn't care, who is not emotionally involved in that property whatsoever. It's not their investment. You effectively have an accountant somewhere that says, this spreadsheet says there's £0 left for this month and less for next month because actually we've gone over budget this month. So you're going to have to wait 2 weeks before we come out and have a look at that patch of mold or whatever it is, because you do hear those horror stories.
Yeah, so absolutely.
It's weird, and I think as if it's being portrayed as a vote winner, I don't know how well that's going to do, because I think renters probably don't have to, look that far or think that far ahead to think, all right, I mean, that seems okay on the surface, but what will that mean? And I think for a lot of renters that have had good experiences with landlords, you could end up potentially alienating them. So actually, it's been all right for us. Our landlord hasn't put up our rent significantly over the 5 years.
The vast majority of it's the silent majority again, isn't it? Right, the vast majority of tenants actually have a good relationship with their landlords, but you only ever hear from the negative.
They're very loud
side
aren't
of
they,
it.
the negative ones. I think
Who's it? Generation Rent or something like that come out with all the negative news and all of their stats that are just.
I mean, do you know what? Like, I think there has to be the balance of having two sides that are kind of having a debate about whether things are going well or not. And there's always going to be those extremes of people that have horrific experiences as renters, and the landlords that have a horrific experience as a landlord. So I think if those two sides are, very, very small, that percentage of landlords that have a terrible tenant, small, and I have family that have, you guys actually look after some of the rentals for now. They've always had great experiences with the tenants over, a period of longer than a decade. And I've always had great experiences with my tenants, and it's always been positive. So I don't have so much of an issue with, I don't think it needs a huge amount of reform, but at the same time, I can understand.
It's got to be an even playing field, right? So, look, you've got rogue landlords out there. Those are the only ones that you ever hear about. You never hear about the good landlords that do everything correctly, put all the compliance in place, etc., etc. So what they've done is gone to all of landlords and said, right, these are the policies we're putting in place to make it fairer for tenants. But what if a tenant doesn't pay rent? Okay, and they're in their property. It's taking 9 to 12 months to get a court date to get their property back. They don't get anything financially. They lose out on 25 grand. And then what do they do after that? Or the tenant damages the property, and they have, people come to live with property. It's nothing gets done to them, but the landlords get penalised because they don't get any rent for the rental arrears. So the system is broken. They need to sort out both sides of everything, and if they sort out both sides for everything, then it's just going to be better for everyone. Landlords are going to stay in the market. Tenants are still going to be there. It's just that they need to look at all of it rather than just one specific side of things and make it easier for them, but not make it easier for the other party. It doesn't make sense. Silence.
Coming next week. Andy's manifest.
No, but do you know what I mean? It's got to be. Got to be both. Everything is about tenants.
It should be about balance. I totally agree.
It should be about balance. There's nothing there for the landlords. They're penalising the landlords for everything. But
it's
giving the tenants
it's the vain hope of the capital appreciation for landlords. That's what they've got to cling on for, and why they do it is the knowledge that, if you're a classic 50-year-old landlord, you bought your first home for 3 halfpenny bits and whatever the language and the currency was, and they're hoping that the flat that they've bought later on in life with some dividend payments and this, that, and the other will do the same for them, that they can hand down to future generations. That's what they're holding on for, because the month-to-month tax means that there's very little profit in it, and the increasing kind of language towards them isn't particularly friendly when they're providing a good accommodation to good people broadly where we are. But tenants are good, landlords are good. There's just a bit of negativity towards both parties, which frankly just doesn't need to be there.
But that's a common thread, isn't it, in the media, is that, and I think often with these really hot political debates, it's you go online, you go on your phone, you read the news in the morning, having your coffee, and it seems, oh wow, these two groups really hate each other. And then you actually go out and speak to some people, or often I'll be sat in an appointment with somebody who's renting, and I say, oh, actually our landlord's great, we're quite happy. Quite happy. And you these groups will meet each other, and it's like a case of, to use that analogy, if you ever seen those like videos of two dogs on either side of the fence, they're like going at each other, and then you take the fence away and they're like, oh, hi.
Gents, Vez, thanks again for joining us on the Investors Corner. No doubt there will be more election-based content over the next 5 weeks. We'll try and keep it to a sensible minimum, so we can provide useful content for the future rather than the next 5 weeks. But join us next week and we'll catch up then.